Hey guys, welcome back. So today we're going to discuss the topic of should you refinance or wait for lower interest rates to come. We're also going to touch on a topic that a lot of viewers have reached out to me directly to ask, and that's should you refinance to lower your monthly payments or actually go into forbearance to save money on your missed payments because they're going to be added to the back of your loan. But before we get into that, my name is Jeb Smith. I'm a real estate broker here in Southern California. I want to thank you for taking the time to watch. My channel is all about helping educate buyers, sellers, and homeowners through that real estate process, whether it's buying or selling real estate, refinancing, or even forbearance and trending topics like that. So if that's of interest to you at all, do me a favor, hit that subscribe button and give me a thumbs up if you like this content. So the question that I started with is, should you refinance or wait for lower interest rates to come? Now, again, I've said this before, but it all depends on what you are trying to accomplish with, your goals and housing and all of that good stuff. But let's talk about where rates are and give you some of the pros and cons of refinancing now. So, interest rates, Fannie Mae came out recently and said that the average interest rate on a 30-year fixed was somewhere around 3.1%. That's average. So that means some people are getting higher than 3.1, some people are getting lower, but on average they're 3.1%. They also went on to say that as we move into the third and fourth quarter of the year, they expect that average to go down. So they're actually expecting that average to go somewhere around 3%. And as we move into 2021, the average to be somewhere around 2.9%. So what Fannie Mae is saying is that as we move into the end of this year, the beginning of next year, they expect rates to trend lower. So a lot of people are out there wondering, hey, should I refinance now, or should I just wait and take advantage of lower rates in 2021? It's only 8 months away. I can save more money, etc. So let's think about a couple of things. By calling your lender now and having that conversation, if financially it makes sense today, and what I mean by that is if you can save a certain amount of money per month that will actually help you, will benefit you, will allow you to sleep better at night. Maybe it allows you to put more money towards something else. Then, in my opinion, you should probably take advantage of rates now. And the reason for that is because as much as we think rates are going to trend lower and go into, the mid twos or even possibly even lower, we don't know for certain that that's going to happen. Another couple of, things to consider is we don't know where your employment is going to be in 3, 6, 9 months. We don't know where house values are going to be in 3, 6, 9 months. So if you call today and you had the value, the equity in your property to refinance and take advantage, and that number to you, was something that intrigued you, then it's, I would tell you to take advantage of it, right? Because by waiting, you have the possibility of as stable as your job may be, as stable as home values may be today, we don't know, again, what the future holds. So by taking advantage of it now, you don't have to risk what happens in the future. There's a saying that says, a bird in the hand is worth two in the bush, which basically means that if you can take advantage of something now, you should, versus waiting until later with the possibility that things go lower. Now, keep in mind, even if you're one of those people who take advantage of the market now and refinance now, if rates go lower and it makes sense to refinance in the future, you can also take advantage of that in the future. There's nothing to say that you can't refinance now and refinance again in the future. But some things to consider if you're going to consider refinancing. Make sure that the savings that you save per month actually pay back in a reasonable amount of time, right? So there's a lot of lenders out there, a lot of mortgage brokers out there that'll do no cost refinances, no cost loans that allow you to refinance without having to come up with any money out of pocket and without adding it to the principal balance of your loan. In that case, it's a great deal, right? Because you can save money per month without having to really pay anything. Now, there are lenders out there that will also refinance you and add your closing costs to the balance of your loan. Now, if they do that, or if there's a place where you have to come up with money out of pocket to do that, you have to make sure that the savings that you're saving per month are paid back in a reasonable amount of time. And what I mean by that is, say your savings are $200 per month, but it costs you $5,000 to refinance. Well, it's going to take you just over 2 years to recoup that cost. So you've got to decide whether or not that makes sense based on your goals. If you're not planning to be in the house in 2 years, you're planning to sell before then it's probably not the right move. But long term, if you're planning to be there, then financially it's something to consider. Now, UWM, United Wholesale Mortgage, came out, I believe last week, and said that they were going to be offering rates somewhere around 2.5%. And that rate is available to anybody refinancing, so no cash out, just a straight rate and term refinance, and for new purchases on property, as long as you haven't held a loan with them in the last 18 months. Now, UWM is primarily a wholesale lender, which means that you need to go through a mortgage broker to do a loan through them. So, most mortgage brokers out there are approved with them, but if you need somebody to refer you, I'm happy to make that referral so that you can have that conversation with somebody that can take advantage of those rates. But the reason I bring that up is because if the average right now is somewhere around 3.1%, and UWM, this big wholesale lender, is offering loans around 2.5%, chances are they see something to come, right? They're seeing that the market is going to bear lower interest rates. That's why they're willing to go out there and do it now, obtain that new business, because they see rates trending lower. They wouldn't do that if they thought rates were going to go higher. They wouldn't do that if they didn't think that they could take those loans and sell them on the secondary market at some point in the future by having a lower interest rate than anyone else. So chances are rates are going to go lower, but what I would tell you is if you're one of those people that don't want to take advantage of the market now, still call your mortgage professional. Have that conversation. Get the paperwork into them. Make sure that you can still qualify. And then, when rates do get to a number that you're comfortable with, whether it's now or waiting in the future, you can just push that button. They can lock the loan. You can move forward versus hearing rates are low, having to gather the paperwork, do the application, and go through the process at that point. So that's my take on that. Now, a lot of you guys are, should I take cash out and all of that? I would tell you that, in this market, cash in your hand is valuable. So if you don't have money in the bank and you can refinance and take advantage and put some money in the bank, it may be worth considering. But if you're going to take that money out and spend it on things that, you don't need to impress people you don't know, then I would tell you to keep the money in your property and not take it out. Right now, if you can pay off cars and save money per month, then it may be something to consider. But for the time being, I would tell you to just take advantage of the lower rates and not worry so much about cash out unless you absolutely need it. Now, another question I ask at the beginning is, should you refinance or go into forbearance with your lender because you're actually going to save more money by going into forbearance? I've had a couple of you guys ask that question. So, I would tell you this, don't go into forbearance unless you absolutely need it, right? So if you're in a position where financially you can't make your monthly payments, you don't have savings, you can't pull from other places to pay your loan, then forbearance is the option to go. I wouldn't use forbearance to miss my payments to add them to the back of my loan so that I could save that money per month and use it towards something else. I feel like there are repercussions that come with the forbearance process that we haven't yet figured out. It's not supposed to affect your credit, but we have found out that there are people's credit that's being affected. You're supposed to be able to defer it to the back of your loan if you have a federally backed loan, and you're just supposed to be able to resume payments as normal at the end of your forbearance period. If you can get your lender to agree on it, which basically means that you just pick up where you left off and start making your payments. And so people are asking, well, if my mortgage payment is $3,000 a month, I'm able to save that $3,000 a month and put it away or pay credit cards or do something else, and it just goes to the back of my loan. Yes, in theory, that's how it works, but right now there's a lot of unknowns. There's a lot of, unforeseen things with regards to forbearance that I think haven't yet popped up. Currently, if you're in forbearance, you're not in a position to refinance. You're not in a position to buy another house because, most lenders, their guidelines require at least 12 months for you to take advantage, at least 12 months out of forbearance in order to take advantage of refinancing or purchasing. So there's a lot of people out there that went into forbearance initially and have now since tried to refinance, and they're finding out they can't do it. So that creates other issues down the road. So if you're one of those people that are planning on buying a house in the future, I would tell you that, refinancing, if refinancing can lower your monthly payment and save you any money, and you're in a position to pay that payment, refinancing to me is definitely the best option versus going into forbearance. I would only use forbearance if I absolutely had to use it, and that was the only way out. So, again, I hope this video is helpful. What I'd like to ask is that if you have questions, reach out to me directly, comment below. I do my best to address every question that comes across, and if I don't have the answer for you, I'll put you in touch with someone who does. And if there's additional videos you want me to make on these topics, I'm happy to hear them. Always looking for topics that you guys have, because if somebody has it, then chances are a lot of people have it, and again, it helps me educate all of you guys. So I appreciate you taking the time to watch, and I appreciate your support, and I look forward to seeing you again soon. Have an awesome day. Bye-bye.